please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Asian markets, they have opened up for trade. Remember, yesterday most of the markets were shut, and some of those markets are trading lower.
Bull markets know no top, bear markets know no bottom. We are in a structural bull market, but in the near term, this is a bit of a bear phase that the market's going through.
Internationally, India is not in the top 5 list of invested locations at this point of time.
Markets are starting on a slightly subdued note. It's flat as far as the big Sensex and Nifty are concerned.
Market's probably going to remain weak for a while.
The average cost of fund for us still remains at about 8.3, 8.4.
Nifty, which is back at 11,000 as we speak.
All of them will subscribe to the 4,500 crore issue, and they are trying to sell 25 assets. 14 of them, they've got expression of assets, interest, and if they are sold, then they can meet that 17,000 crore.
Yes, Bank. So that from the positive zone has turned into the negative and is inching closer to its 52-week lows as well.
Now in the red, 1 point change down on the Nifty.
Okay, it's a day story, not a month story. Today's been that kind of a day. Just look at that. And what's been really interesting is that over the last 1 hour, because of the statements coming out of Delhi, you had perhaps the market equilibrium being changed twice or thrice, but still, crude is the other factor which is playing spoil sport. So all in all, crucial last hour coming up. This is Closing Bell. I am Anuj. With me is Surabhi. Hi, Surabhi. Good afternoon.
Good afternoon, Anuj. 3 peaks on that graph, and then we've seen the troughs form. In fact, right now, despite the statements that you got from the LIC chairman, once again, I think the sell down is a little more apparent in the Nifty Bank at this point. What is happening now, Anuj? So much of volatility, but the fact is people are using every bounce to sell. And you were making this point in the morning that we're looking a little weak despite the 2 days of fall.
Oh yes, mid-caps in particular is quite vulnerable, Surabhi. Look, what you had is talking up the market today. This is what is, talking up the market. See,
talk about talking up the market. The statement like that, a government official saying that RBI should consider cutting CRR?
See, the point here is, again, the markets have had a one-way downtick. The bears have had a field day. Like you saw with the currency market as well. Sometimes all you need is statements just to scare the weak bear away, just to scare the speculator away. And there's nothing wrong with that. The market should not move in one way. Today also you've seen, for example, the way DHFL, Indiabulls housing have once again fallen 25-40%. Yeah. So obviously there's the market's sensing something. Perhaps it's a stock specific issue. It's not an entire systemic issue. But the government officials from time to time will talk up the market. It will be important to see if this is successful, because again, what has LIC chairman said? All options are open. That we knew. But let's see if there's some real cash which is induced. That is the need of the hour, and that perhaps would put a more durable bottom. These kind of moves, Surabhi, normally I've seen fizzle out and they don't last long. Like you saw with the currency, it went from 73 to 71 thereabout, and then again back to 73. But a lot of the stocks are seeing buying at lower levels, especially the good quality stocks where you had seen a sharp correction.
I just want to pull up the bond yield, because the bond market hasn't even batted an eyelid on this statement, at least as of now. The yield is still at 8.134, so there's no major dramatic fall in yields, because this is, again, as Anuj is probably saying, this is ahead of the policy, a bit of a mood building that perhaps is happening, that maybe the RBI can be a little charitable towards the market, both the equity and the debt market, but otherwise the yields are flat. On NBFCs, Anuj, particularly on housing finance companies, is this looking like a very orchestrated, obviously a complete bear attack that's underway? Because again, a stock like DHFL, despite repeated con calls and management clarifications, again falling 30% today.
For right or wrong, the market believes that, the day Yes Bank issue was announced and you saw that big fall, and today also you saw that intraday fall on Yes Bank, almost a vertical fall, and DHFL and Indiabulls housing. I think the market's trying to
piece something together.
Between the three entities. For right or wrong, of course we won't know, but stocks, large cap stocks don't fall like that. 40% fall, after that some recovery, and then again 30% fall. Same with Indiabulls housing is a Nifty stock. It's not even a mid-cap stock. So obviously the market, for right or wrong, believes something here, and that's why it's happening. But the other NBFC stocks have recovered today. For example, in the morning, we were talking to M&M Financial. That stock did quite well. In between, you saw Chola Mandalam recover intraday. Bajaj Finance from the low point is recovering intraday. So that the panic move perhaps on the entire sector might be over, Surabhi. It's now about individual stocks. That day, you had fall across the board. Today, that hasn't happened. Today, it's restricted to 2 or 3 stocks. The rest, I think everything is fine now.
Okay, well, let's just move forward and tell you what's lined up over the next 1 hour or so. It's all about macro cues. They're continuing to dominate the market's mind today. By the way, crude oil prices have topped $82 a barrel, so that's another added negative cue for the time being. The rupees managed to pull back from intraday lows of 72.96, still looking a little vulnerable. And then, of course, an eye on the credit markets as well. We discuss all of the cues together with SP Tulsian of sptulsian.com, market expert Anand Tandon, and Sri Shankar of Prabhudas Leeladhar. Will the market tide over this volatility? What should your bets be? What is the outlook from BNP Paribas? Manishi Ray Chaudhary joins in. IT is one of their preferred sectors. We get you more analysis with Manishi as we move forward. NBFCs continue to be under selling pressure. What is the route ahead? What do you do with some of the housing finance names, for instance? We get you a view from UBS. And of course, as always, we will, of course, be tracking some of the major movers in trade. Yes Bank, ahead of the board meeting, very vulnerable. We focus on that stock. And trading calls with Ashwini Gujral and Mitesh Thakkar.
Okay, let's in fact straight away get across to both Ashwini and Mitesh for last hour strategies. It's turning out to be a very volatile day. Ashwini, last 2-3 hours, there's been so much volatility. Your thoughts and your trades for last hour?
See, first of all, neither ILFS nor RBI can change the trend of the market. Yes, they can, induce volatility, but it's not their issue. Otherwise, you would be in the positive by a long way. If crude continues to appreciate and rupee hangs around here, you can do what you like. We will finally go down. So because the entire problem is the macro issue, it is not DHFL or Indiabulls housing, etc. So till that core of that problem isn't solved, I think market will remain weak. Yes, we can not fall on certain days, but that doesn't mean that there is great amount of buying which is coming back or the fall has stopped, because till the macros are against the market, the bear will never cover, and you will get your one big green bar and that'll get sold in 2. So maybe we are at a support, but that doesn't mean that we should go ahead and buy. So maybe a couple of days, a bit of 30-40 point volatility, but the trade has to be to sell on significant rallies. Now, for the moment, RBL is a sell with a stop of 515, target of 490. Indian Oil is a sell with a stop of 155, target of 142. And Infosys is a buy with a stop of 727, target of 750.
Okay, yeah, IT is the one island, I think the only green island that we've seen past couple of days. So Infosys is on the buy side for Ashwini. Let's bring in Mitesh as well. Good afternoon, Mitesh. Not an easy day to stomach if you're not a nimble trader. It's been all over the place. Your thoughts and, of course, the trading ideas.
So I would agree with that. I think the last few days has required traders to be extremely fast or, react very fast. But having said that, I think typically, looks like that we've had some kind of a mild pullback. My sense is that closer to about 10,825, 830, and today's low is around 10,880. I think you might find support, but then the trend doesn't look like to be reversing. So what might happen is that you might get these kind of choppy pullbacks which we have seen, a part of which we have seen today. So I think the markets could be extremely choppy, but not moving much compared to the fact that we have declined in the last 5-6 sessions. So that kind of fall might stop, but the intraday volatility might just go up. For the time being, I still am trading more with short bias. So I have 2 sell calls. M&M is a sell with a stop at 886 for targets of 850, and Gen Irrigation is a sell. Keep a stop at 76. Look for targets of around 70.
Okay, by the way, just look at intraday chart of Indian Bank. Now, this is supposed to be the strongest PSU bank outside SBI. I don't know if the market's sensing something here. 10.5% lower is what you have on the stock. Big move happening on the stock, 10.5% right now. In fact, SP Tulsian of sptulsian.com and market expert Anand Tandon now join us. Good afternoon. Mr. Tulsian, the sudden move on Indian Bank, anything that you would have heard of?
No, it's difficult to take a call, maybe, because there is no point in speculating on the negatives, because if I say that maybe some kind of some weak banks are seen being dumped into, because that's what the probability is. Marketing is speculating that yes, Union Bank, Indian Bank and Bank of India, or maybe for that matter, PNB may see some of the banks coming in their fold. But that's difficult to take a call, because people ultimately feel that the banks which have not corrected, because PSU, the overall sentiments are seen to be bad, because if you see the private sector banks taking such a big hit, the value differential between both the things have eroded. So obviously on a relative basis, all PSU banks have to correct from the current level. So maybe just a profit booking, and in fact the Indian Bank has been seen the investors favorite, and they have been holding it for quite some time.
Yeah, this is a bit of a PSU bank move once again starting. Let's pull out PNB as well. That one is down about 7% right now. These kind of moves do not sustain, Surabhi. If there's a bit of a structural problem is crude. It's gone to 82.5 now, rupee at where it is. So obviously intraday pullbacks, that scares the weak bear away. But the one thing which it does is these kind of big up bars or bars actually give an opportunity for the strong bear to once again enter. Yeah. All you need is intraday rallies for them to make a fresh entry. And that's what's happened, I guess, with some of these stocks.
Yeah, now. Absolutely. And the fall on Indian Bank is quite stark. I mean, there is a meeting that the FM has been having with PSU Bank chiefs. Not sure if there's anything related or maybe more amalgamation or M&A. That could be a fear. Not sure, but that's all speculation right now. Mr. Tulsian, good afternoon, sir. I just want to come back to some of the NBFCs, particularly housing finance companies. And today's price action is quite bizarre. I mean, DHFL another 30%, Indiabulls, but even Canfin Homes is down, Group Finance is down, PNB Housing I'm not even talking about, but even that's down about 4.5%. On housing finance, specifically Indiabulls housing finance, would you use this kind of a fall to buy in?
See, Surabhi, yesterday also I've said that probably yes, we will take a call on Indiabulls housing finance. In fact, I was amused to see the DHFL, rising by about 18-20% yesterday, which I was not convinced, because there has been the weakness, or maybe the structured weak bias now seen building on DHFL unless until we see the clarity coming in on the entire business model. But having heard the Indiabulls housing finance management, where they have said that they are sitting on 21,000 crore cash, and I'm unable to accept this argument beyond a certain point of valuations, whether you take a call now on Canfin Home, PNB Housing Finance, LIC Housing, HDFC Limited, Indiabulls Housing Finance. In fact, all of them are looking good, because if you really take a call on all of them, they are all ruling at a P multiple of in the single digit, anywhere between 7 to 9.5 or maybe 10. And even on the financial front, the going forward, because what market is trying to take a call that all their receivables of the short-term receivables will not come, all the liabilities which they are going to see, whether it is on a CP account or maybe on any other debt instruments, are not going to get honored because they are not sitting on cash. So I think this is an extreme pessimism, seen building, and which has to come to an end. Which in fact I've said yesterday also that I don't see any reason to move beyond the expiry date, because these are, I'm not saying that there is no delivery element involved into it, but it is a confidence crisis. Nobody wants to really hold the housing finance company, and even if you see the sales figures of the FI, you don't get that award from where they've exited and where they've entered. So yes, the sector per se is becoming quite positive. In fact, I've said that, in fact, if you take a call on the mortgage or the housing finance business, 18 lakh crore is the total exposure of the India, in the sector, which is seem to be quite low. And I don't think that the valuations after seeing such a big destruction, you may exclude a few of the stocks. Even DHFL now, till yesterday or day before, I was not very comfortable, but after having corrected 30% today, even you can take a call on DHFL also. Maybe I'm not just taking a price story. Even if whatever negative has to come on the interest cost rising up, shrinkage in the NIM, have all seen having got factored in, which will get, which may be problem for the next couple of months or maybe maximum 2 or 3 months.
Okay, by the way, the one pocket which has seen some recovery today and has really helped the markets is the A, HDFC Twins and B, Kotak Mahindra Bank. Just pull out the intraday chart first on HDFC Limited. That stock now at the high point of the day, so 2% higher is what you have on HDFC after a big fall that we have seen. That's a welcome relief for the bulls. That's HDFC Bank. But bigger recovery is happening on Kotak Mahindra Bank. If you see the intraday chart on Kotak, in the morning it almost broke 1120 thereabout and now making a sharp move to 1164. Ashwini, quick thoughts on Kotak Mahindra Bank?
See, again, it's fallen for many days. I don't think this sort of recovery is worthy of buying. It's not even hardly 1%. So my sense is that, sure, everything will go through their own pullbacks by rotation. Okay. But I don't think it's good enough to buy right now. Okay, it's not good enough to buy. Anand Tandon is also with us. Anand, good afternoon. Your thoughts on stocks like Kotak and HDFC Bank, whether you would want to buy them now? If, at 1400, suppose Kotak was expensive, but at 1160, is it now in value zone for you?
So first of all, nothing is in value zone. But that aside, I don't think it is a good time to be buying right now. There is always an opportunity that will arise later, even if it is 5% higher, to buy in once the market has somewhat settled down. Right now, there is too much of volatility in the market. And for any long-term investor, that is not necessarily the best time to be looking at doing cherry picking. Of course, if you are trying to do day trading, that's a different issue. But in my view, what we are seeing in the market in financials is far more fundamental. It's far more dangerous than what it appears from the share from just the share price. I think there is a serious liquidity crunch that is building up. Until that is not resolved, I don't see stock prices running up in a hurry.
So there is a statement coming in from Indiabulls Housing Finance, and they've said that they've raised CPs worth 2,200 crores since the 21st of September. And again, they're giving the price as well, so 8.36. I think we were talking about some deals that happened at 11% in the market. Anuj, this is, I think, the company trying to restore some confidence, saying that we are getting money at a reasonable rate even now. Yeah, I think this is, again, talking up the stock, but, just trying to allay some concerns that, there's no freeze in the, debt market, if that's what you're fearing. So that perhaps assuages some concerns for now. No, I guess that would be taken well, particularly in the credit markets, because the rate is quite attractive. If you can get money at 8.36 at a time when, we were hearing all these deals, there were deals around REC and a couple of other, PSUs that were taking place at 9%. So if you can then raise money, and this is between the mayhem period of Friday and today, they've managed to get some money at that rate. Mr. Tulsian, just thoughts? I mean, you were just anyway telling us that you are quite optimistic on Indiabulls Housing. How do you view this development?
See, Surabhi, this definitely is a positive development, but again, just want to continue in this housing finance mayhem which we have been seeing. In fact, now also, if you see, I have just touched upon about a while back that the average P multiple of the sector is seen at maybe 10, 11. But if you take a call, PNB Housing still is ruling at a P multiple of 16, 17. GIC Housing ruling at a P multiple of 6, 7. Canfin Home is ruling at a P multiple of 10. The Dewan Housing may be ruling at a P multiple of 5 or maybe 4, 4.5. Indiabulls Housing is ruling at a P multiple of 10. So there is a lot of variance. Maybe one can say that PNB Housing is seen to be the most expensive. And it can, because what is the reason of the P ratio to rule at 17.17 times? Maybe one can argue in favor of such a stiff valuation that the takers are there at these valuations. But will you be having the takers now at these rates? So naturally, even if PNB Housing corrects by about 15, 20% or 30%, I won't be surprised to see that. So somewhere the adjustment or the position or the investment has to get shifted from the expensive housing finance company to the reasonably priced housing finance company, because this sector has gone away anywhere. We are going to see continuation of the liquidity available to the sector. We are seeing the very robust business model. Even if you have the LAP proportion that is seen to be quite low on an average for all the housing finance companies, maybe at about 15 to 20%, not more than that. And again, it will be just bizarre to take that all the LAP liability LAP assets will also get wiped off, and we won't be seeing any recovery and taking the extreme view on the liquidity front as well. So yes, the sector is becoming is quite interesting, but we need to be very careful in choosing the respective company for making investments.
Yes, you hit the nail on the head, Mr. Tulsi, and that point is well taken. What you're seeing right now is a sharp intraday recovery in Indiabulls housing as well. But there's been quite a bit of selling over the last few days. Sandeep Wagle is also with us with some fresh technical ideas. Sandeep, good afternoon. What are you trading?
Afternoon, Anuj. I would go with a buy in a HCL Tech, stop loss of 1107, target 1143, and a sell in a Arvind, stop loss of 351, target 330.
Okay, all right. Thanks very much for joining us there on that, Sandeep. Anand, I'm going to come back to you because you were sounding far more circumspect. You're saying that you'll probably not look at financials till these credit market issues are over. But take a look at this. I mean, this is example of fact. If we take the company's word, obviously, as they tell us, they've raised money at 8.36% during this mayhem period, and they managed to raise over 2,000 crores. So then is this getting a little excessive, this whole bear attack on NBFCs, particularly housing finance companies?
Well, obviously there is something in the which is spooking the market, and we don't know enough about it. Of course, every company and every regulator will come and try and cool down nerves, and if that is successful, you will get a chance to buy stocks again. All I'm saying is that today, when you are in a situation where it's not necessarily only to do with NBFCs or housing finance, there seems to be a sudden sharp fall in the liquidity in the market overall. The fact that the RBI had to do an OMO tells you that they are trying to react to it, but I think the size of the OMO is so small that you are not likely to make much headway trying to calm nerves. Of course, on a valuation basis, the demand housing is now trading at book value. What can go wrong with that? 14% return, 14% ROE, trading at book value, it's a no-brainer. But the question is that if the market is still, look at it between the yesterday and today, the market is trying to tell you that, look, we are not yet happy with whatever we've heard, and who knows what else will come out. So I'm saying that, yes, if you are willing to take a bet that everything is as it was day before yesterday, then it's a fantastic opportunity to buy. All I'm saying is that whenever a market turn of this magnitude happens, I would wait to see that there is actually no evidence of any problems before I would rush in if I'm using my own money. If you are a mutual fund, of course you should buy.
Okay, fair enough. Well, I'll tell you what, there are buyers that are emerging finally in this late afternoon. Let's pull up some stocks: Reliance, ICICI Bank, HDFC itself. There is some recovery from the lows that's happening. 40 points up on the Nifty now. So, Anuj, for now, I guess all the talking of whether it was the LIC chairman, government official, and Indiabulls statement coming in, helping for now at least?
Oh, yes, and you know what? It's 10,950 was the low on Friday. 10,950 I think was low yesterday as well. I think we're now reaching a stage where perhaps that's emerging as a bit of a support. And this market is heavily net short. So any kind of positive news, like for example, Indiabulls housing finance, you've seen the intraday move, right? It was down 20%, nearly that, and it's seen that kind of recovery. So this market now is prone to these kind of sharp recoveries, intraday recoveries as well, especially in financials where the fall was really crunching. We just discussed HDFC Limited. Now that's moved to high point of the day. Same is the case with Kotak Mahindra Bank. That's also moved to high point of the day. In fact, the move on HDFC is now getting quite big. Now the Nifty is at the highest point of the day. 11,022 is what you have at this point in time. This one finally looks like more durable of the two moves that we've had today, Surabhi. We had one move in the morning that got sold into. We had one move some time back that also got sold into. This one is looking purely a bit more durable. So now up about 56 points on the Nifty.
Okay, I don't want to be party pooper, but the fact is I think for now the market has put other macro concerns like crude, etc. behind it. Right now there seems to be just some sort of relief coming in that the credit markets are working, companies are getting money and not at exorbitant rates. And it seems, institutions are saying they will try and come in and save IL&FS. That was the chairman of LIC talking a little earlier. Well, back to some more stocks that are on the move. Mr. Tulsian, today we've seen a decent amount of buying come back in insurance companies as well. For instance, HDFC Standard Life, actually even HDFC AMC, up about 3-4%. So insurers and asset managers seem to be finding some bargain hunters. Would you look at this basket?
See, Surabhi, actually, if you really take a call post this advanced tax numbers, where the liquidity crunch is seen to have been feared. I'm not saying that the liquidity crunch is not there. In fact, I was touching on this point, maybe when the series was started, that the advanced tax will be seeing the good amount of liquidity crunch seen coming in, but I was not expecting it to last maybe post the advanced tax payment, having happened on 15th September, Saturday. And I was expecting that maybe after a couple of days, the things will improve. So probably because even insurance companies are big player in the money market, they make the investments into the stocks and all that. So all kind of rumors are seen having spread, that there is a huge liquidity crunch in disproportionate. As I said, I'm not saying that there is no liquidity crunch, but it has been blown out of proportion. And yesterday or day before, in last 2 days, we have seen the turn of the insurance companies having mercilessly beaten, So probably this is the end of the weakness climax we are seeing reaching to, which I have been saying for last couple of days, that maybe probably with end of expiry, because whenever you see the whole series seen having washed out, because it was feared to be so weak in the first 2 weeks, but having extended for the next couple of weeks also, I'm not taking a positive call, because if you take a historical call, October series is always seen to be the weak, and we have seen that kind of things panning out. But at least for the time being, I'm expecting that the expiry will be seeing the end of all this weakness, and all this, whether you take a call on NBFC, housing finance and insurance companies, largely these three, or you can include the private sector banks also in the same category, all are seen to be having bottomed out, and we will definitely be seeing the short covering, and even the short covering rally could be very big and very swift, in this maybe next couple of days as well. I won't be surprised to see them recovering. In fact, when the Indiabulls housing can recover from a low of 786 to 920 just in a matter of couple of hours, the similar kind of up move can be seen in case of the private sector banks, at least, ahead of this expiry in the next couple of days.
Okay, all right. Well, thanks very much, Mr. Tulsian, for joining in. That's an optimistic note to end our conversation on today. By the way, the recovery on Indiabulls housing finance is absolutely breathtaking, to say the least. The stock is now down only, 5.5% from an intraday low. The low, I'm just checking the low that it hit today. We're talking about close to 820. From 820 to 920 plus, when you've got a more than 100 rupee move on the stock from the lows to the high today.
Yeah, and even Bank Nifty recovery is quite, sharp now. Keep in mind, the Bank Nifty had a one-way decline. All three expiries this month were negative, and even now, I think for the weekly options, we perhaps might still be in the negative. I would check that. But now we're approaching a 300-point Bank Nifty rally. That looks quite big now, Surabhi.
Okay. Anand, before we let you go, now we don't know if this is somewhere the bottom. I mean, and tell us if you think that we're close to forming some sort of a bottom of this credit market panic or not. But anyway, I mean, stocks that you'd like to pick up, for instance, IT has been so strong. Despite the run-up, would you still back a TCS and Infosys?
Well, for lack of anything better, the answer is yes. So very broadly, if there is any issue in terms of credit markets, anything which is called a mid-cap will die. Right? At the end of the day, you just can't sell them. So therefore, you can see most mid-caps even now are probably down 3, 4, 5% and will continue to remain there unless, like I said, there is a huge reversal in liquidity. That pretty much brings you to the frontline companies. And in the frontline companies, there isn't that much choice of those which are going to benefit from the fall in the currency. Clearly, you have to look at the export sector. So for lack of anything else, you essentially go back into pharma and IT. None of them are now spectacularly cheap, but they are still relatively cheaper than the rest of the market. They can at least lose you less money than the rest will.
Okay, Anand. All right. On that note, we will let you go for the day. Thanks very much for joining in and giving us your take. Well, that's the story so far. Not looking all that bad. The bulls finally making some attempt to at least come back on the street. 63 points higher, 11,030 on the index for now. Well, on that note, let's get the other promised conversation going. We have Manishi Ray Chaudhary, Asian equity strategist at BNP Paribas, joining us now to take things forward. Manishi, good to have you on the show as always. There's so much that's been happening. The last 3 days have been really, really long. Your thoughts on everything that we've seen, this credit market tightness, the kind of clarifications that are coming in. Is the worst over, or is there more to come?
India has suffered from a confluence of international and domestic issues. The international issues obviously relate to the currency and the oil prices, the commodity prices in general. And the domestic issues relate to these liquidity concern in the non-banking finance universe. We think that the current level of volatility might actually continue for some more time, because the factors that are contributing to the currency volatility would possibly last a while longer. We are already seeing the Brent crude at about 81.4 or so, and we think that in the near term, maybe till the first quarter of 2019, oil prices could remain elevated because of the various geopolitical concerns that we are seeing. Consequently, we think that even the pressure on the Indian currency might continue in the short term. Now, obviously, there will be some short covering, some knee-jerk reactions along the way, but I don't think there would be any respite from the level of volatility that we have seen recently.
Okay, Manishi, good afternoon. Just stay on for a bit. I just need to address this move on the market, because this is now 200 points on the Nifty, Bank 50 points on the Nifty. Ashwani, is this looking like a more durable move, or again, once again, would get sold into? Your thoughts?
See, this is not the bottom, but it is a bottom, and from where you can get a 200-point Nifty move right up to 11,250, and maybe on the Bank Nifty you can possibly get back towards 25,700, 800. Obviously, no fall can be just one way, so I would think a 2-3 day type up move is possible. So we are carrying home Bank Nifty positions, because today the factors were against the Bank Nifty, but it has held on, which means kind of just for the short run things are priced in, and we should probably head a bit higher from here before we decide where to go next. And in terms of buying, I think Kotak Mahindra, Axis, HDFC, the spaces which had the most amount of pain are likely to have the most amount of rally also.
Okay, fair enough. Ashwin, we'll come back to you for BTSC call, but for now, let's go back to Manishi. Manishi, speaking of oil, can it go to as high as 90, as some of your peers have been projecting?
See, our global commodity strategist's point of view is that oil is possibly close to its peak. It may go up slightly higher from now, but not much higher. We have a target of about 82 to 85 on Brent by the first quarter of 2019. That is when we would feel the full impact of the various geopolitical concerns that we have, the Iranian sanctions and everything else, and many other supply side disruptions. From the second quarter of 2019, and particularly in the second half, we actually expect the supply side response to US shale production to kick in. So that level of 82 to 85 in the first quarter of 2019 is likely to be the near-term peak, in our opinion.
Okay, that would be very good news for us here in India. It would be a major sigh of relief, Manishi. But I just want to get back to the credit market issues, because that's what really brought the equity market down on its knees last few days. What is your view of the current credit landscape? Is there still a risk of spillovers? Though we've had certain confidence-building statements come in this afternoon. How do you view this risk aversion?
In the near term, I think both from the central bank and from the government, it's difficult to expect any drastic measure. The Reserve Bank of India has already talked about inducing liquidity through OMOs, the open market operations. I think that could have some degree of soothing effect on the liquidity situation as and when it actually gets conducted. We have also had similar statements about lending to the NBFCs from some of the largest public sector banks. Now, having said this, the current concern that the banks have about lending to the NBFCs, and which stems from the non-performing asset-related concerns and also the ALM-related concerns, the asset liability management-related concerns, that we think would likely continue in the near term. So, this short-term liquidity concern that we're seeing in this market, I think we have to sort of brace and, grin and bear it for the time being.
Okay. Well, what's the call on NBFCs now, Manishi? We're just talking to, we're just talking about it through the day and for the last many days now. Bajaj Finance already in your focus list. Are you buying more names?
in general, the way to kind of sift through the NBFCs and select the relatively safer ones is perhaps to look at their ALM, or the asset liability management profile. So I think there are some concerns on the housing finance companies in this regard. But if we are able to find relatively safe ALM and relatively safe asset quality in terms of the potential NPLs, which I think would be relatively safer for the retail lenders, those I think would be a subset of NBFCs which investors can look at. And obviously there has to be a valuation overlay as well, because over past 1 year or maybe about 8 to 10 months, these NBFCs had reached almost stratospheric valuations. So the ones that have corrected the most and fit those fundamental risk criterion that we talked about, they would possibly fit into that basket the best.
Okay, I know you can't give us names, but because you don't talk stocks, but yeah, just to mention to our viewers, in the BNP Paribas India list, Bajaj Finance does find a mention. There are a couple of life insurance companies. There's also Kotak Mahindra Bank, by the way, which is doing really well. But Manishi, just coming back to sort of broader questions, then the market has given an 8% dip from the top. So what is the portfolio stance? What would you like to buy in this decline? For instance, I do notice that you like stocks like Maruti and Eicher, and they've corrected quite a bit in this current round of correction.
As far as India is concerned, today the most obvious trade is to go long on the exporters, the US dollar earners. They have a strong tailwind, not just from the global trade friction, which actually opens up some degree of market share gain possibility for them, but also because the US dollar appreciation itself is a strong tailwind for their revenues and margins. So we're talking about IT and pharmaceuticals here, and among these, I think IT is right on top of our preference list. The second basket that I would talk about are the consumer discretionaries. Autos would be an important part of that, and like you pointed out, that some of these large frontline auto companies, they have declined to such an extent that they're trading at close to 52-week lows. I think those are the kind of good quality at low valuation or reasonable valuation opportunities that we're looking at. So autos definitely is this second basket that we would look at, both four-wheelers and two-wheelers. The third basket are the oil companies, particularly the refining and marketing companies, and also some of the large frontline operations in chemicals and refiners. So this universe has done reasonably well, but at the same time we've seen some correction in the near term. And we think that refining margins are likely to stay reasonably strong in the in the foreseeable time horizon. So those are the three main universes that we are looking at right now. There could be a select few consumer staples companies as well, which cater to rural demand, which would also fit the bill.
Okay, finally then, Manishi, are you reworking the Sensex target at all? I think in your last note, the Sensex target that you have is 37,500. So given the plethora of fresh challenges, international, local, are you looking at cutting that target at all?
As far as this year, the calendar year 2018 is concerned, we are not really looking at, reworking the Sensex target at this point of time. We only just have about a quarter anyway. And, we downgraded India to a neutral about a quarter ago. Initially, it didn't work. Over last 3 weeks or so, that call has been working. And we think that this current volatility would possibly continue for some more time. Now, having said that, even that rally that we had seen in India for the first 8 months, that was extremely lopsided. The top 5 stocks in Nifty had generated almost about 70 to 75% of the return. The next 5 had generated about 30%. So the top 10 stocks generated more than 100% of the return in the broader indices that we've seen, which obviously had opened up the possibility that there are a large universe of stocks which had not performed. So in a sense, the buoyancy of the frontline indices was a bit of an illusion. And we think investors would do well to look at those relative underperformers. There are good quality stocks among them as well. And particularly if one can, come out with a list of strong excess return generators, strong free cash flow generators, companies with decent balance sheets, with under-leveraged balance sheets, and which are trading at reasonable valuation at this point, that would constitute a long-term winner list, in our opinion.
All right, Manishi, good talking to you as always. We will leave it on that note. Thanks for joining in. So that's the BNP Paribas view on the market. They're looking to buy interesting bargains, including the likes of auto stocks. He mentioned the ones that have fallen to 52-week lows recently, and I think we know which ones those are. But look at that market go. It's been quite a turnaround. Let's just get some stocks up for you on the screen. HDFC is going to come up, Kotak Mahindra Bank. It's really financials that are leading from the front. The Nifty Bank itself is up about 300 points right now. So, Anuj, this is pretty strong, and I think this time around, at least for the last half hour, the bear hasn't been able to make any kind of a return.
I think the bear has been forced to cover this time, Surabhi, and perhaps the weak bear would have run his luck a bit too far. And I think that statement which had also come on the CRR cut, it may or may not happen.
The RBI to cut.
Exactly,
Yeah.
may or may not happen, but all of this, and in the context, how much has the market fallen? The Bank Nifty has fallen some 2,000, 2,500 points non-stop. So that's leading to this kind of move. But this today's move, I think, has just caught all the bears on the wrong foot, all the shorts on the wrong foot, and has led to massive short covering bounce.
Okay, well, that's what we are getting right now. On that note, we're going to take a very quick break. It's the last 20-25 odd minutes of trade left, so we'll get you some more trading ideas back in just a moment.